JB Cycles with the weekend update on April the 5th. So I'm not calling a crash, but a bounce. Now, I would prefer to be the one who didn't see the crash coming, rather than the guy that called for 20 crashes that never came. So the market is definitely unstable, and it may crash, but I don't want to call for a crash here. So my 4-week cycle, my 2-week oscillation are suggesting we are at a low. We are we are in a very steep downtrend, so I'm not expecting a V-shaped bottom here, but we need a bounce and a bottom formation and then something, and we have to look at that. But first I would like to say that I've been doing daily updates, and that really wasn't my plan for this channel. I wanted to do some forecasting just for fun, no commitment, no obligations, just for free, and I put up my funny face just to show you that this is for entertainment and don't take it too seriously. But I would also say that I think when I'm in the zone, you won't find anyone better than me. But I definitely can be wrong in periods, and yeah, be careful. Don't start trusting me. Do use it as for inspiration. So there's been a lot of new viewers, so let's zoom out and see some context. This is the S&P monthly data going back 200 years, and it is adjusted for inflation. You can see earlier videos about the 28-year cycle, the 56-year cycle. It's alternating between wars and financial crisis. There's something strange going on in the 1930s, 40s with the cycles. So the current cycle is a war cycle, inflation cycle, interest rate cycle, and we are at the top of this trend channel. So I think we have extremely downside danger here. We are at the top of the channel, and the market is extremely high priced, and you can see that in the Buffett indicator or the Shiller PE indicators, all at record highs. And I think an interesting analog is the 28-year cycle from the 1970s. And currently, well, you can see for yourself the correlation, and it projects a crash down into mid-2026. And you know that is also the 3.5-year cycle. And currently, all of last year, I said stay bullish and expect upside into Christmas, although I did point out there were possible bearish setups already from the summer and during the fall, but that was not my main scenario. But when we entered this yellow topping part of the 3.5-year cycle, it was time to look for a top, and we still have not entered the bearish red zone. So, you know, the market has not really entered the bearish part of the cycle, and we are already crashing down. Now, one of the reasons I don't think we are in a crash is that crashes normally don't occur in this part of the cycle. They occur much later normally, or at least somewhat later. So, and I don't like to see a crash, because a crash is bullish. More or less every crash has made a quick low and then a new bull market. You know, you have to go back to the 1929 crash that didn't result in a bullish outcome. So I don't want to see market crashing and capitulating. We need to have people staying bullish and don't believe the market can go down. Then we can have a long down and deep downtrend, because we are seeing weakness in this 28-year cycle. We have been in an uptrend since 2009, but this current 3.5-year cycle has not reached the top of this channel, and we are now we are now in the lower part of this trend channel, and I think this bear market should break below this trend channel. So let's switch over to what I think we are seeing or experiencing. So I'm looking at the first leg down in bear markets, and I was expecting, well, here I have the 80-week moving average, and I was expecting to find the market to find support around that point. And often the markets do, like the previous bear market, we found support at that level, we bounced, and that was the bounce I was expecting, and then we had the panic. But sometimes the market just crashes down. And often, as you see the COVID crash and back here, often that's bullish. We crash down and then everything is okay. The greed comes back, oh, the market is cheap, and liquidity comes back, and then all problems are fixed. I don't want to see that, because I think we have lots of problems coming here. So, let's look at these two kinds of down leg. Now this green one is the average of a down leg that finds support and then makes a nice bounce. And as you see, well, we are now down here now, and well, I was expecting we should have made kind of a double low, because first something like this was my scenario, but then the first leg down was deeper than expected, so I thought maybe we will get some kind of a double low and then a nice bounce and then the panic, but it wasn't that either. And now we are seeing we are getting these bearish confirmations this early on this first correction. We are breaking down, can't find support, and then we have this average in green. That is how the market behaves when it can't find support on the first leg down. And as you see, we should bounce at the part where we are right now, and then we should have another leg down, even going deeper, and with a low around mid-May, and that is interesting. Now, once again, I think market is a bit ahead of itself. We shouldn't have dropped this deep, and we should have a bounce and then get some kind of a double low, probably a lower low in mid-May. But I'm not expecting a crash here, and not much more downside. And here you can see some analogs, 1969, very nice correlation. Well, this is a scary one. It's the crash from I-87. We'll have a look at that. It was a little bit shifted, but you see the distance between these lows is the same. It was all just a little bit shifted. 1919, we crashed down. It was all over and then bullish. 1998, we crashed down and then it was all bullish. 2000, well, that was a bit different. That was the beginning of a long bear market. But then we have 2011, crash down and then all bullish. 2018, crash down and then it was all bullish. And the COVID crash was a bit different. But if we look at my cycles, so I thought we had a 10-week oscillation starting here. Notice my green cycle here is bearish into mid-May. So originally I thought we should expect something like this. You know, first we should find support, then get a nice bounce, and then the panic. Now, however, I am suspecting that maybe we have already finished the 10-week oscillation. We have now begun a new one, but it not so fast. It should, well, you know, it definitely could crash here, but I think it will be something like that. And then we get the low just at the cycle low, a 10-week duration around mid-May. And of course, we do have the scary crash scenario. So we have like this. So here I have measured from the top, and as you see, it looks very similar to 1987. And if it is for real, then we should have a Black Monday and crash down. But then that should be the low. So if we crash, I don't think it will last long. We have to see on Monday, but a bounce is very near, and